Welcome back to the channel. My name is Brad, and we're going to talk about TSPY today. I had a personal interview with TSPY this week. I'm really thankful for his time that he gave me, and it was a really good conversation. I like what he had to say, but I also questioned a lot of things that I saw that was going on when I was tracking their calls. I've been tracking their calls for about a month. A subscriber recommended them, said, "What do you think of these guys?" And I try to track stuff for a month before I give Cy, who's an engineer, lives out west. And Cy, back in 2022, started selling options on SPY. His father was in finance. He's an engineer. And I'm going to say, if you know an engineer, somebody that's not just have a college degree, but is a true engineer, that's Cy. He's an engineer. Very intelligent, very smart, and very engineering-like. He goes through things systematically like an engineer. Something different than maybe some finance people. What he brought to the table was taking the parameters that he was selling his options for back before he's allowed to share what his results were, because he's not allowed to share results in certain funds unless it's actually in a certain type of fund. And it wasn't. It was in his personal account. But what he had is the data from all of his trading. He used AI to develop parameters. Goalpost. Stay in between these fences during these market conditions. Doesn't necessarily mean an algo, because it's not just taking the VIX or not taking CPI and earnings and overnight market movement. And it takes everything together to come up with those goalposts. And it does it on FinTech. So he has a website he brings up and hits the button. It goes and gathers all this information and gives them goalposts. And those goalposts can move. I thought that was fascinating. It's a great way of using artificial intelligence to collect information so you can have it at your fingertips fairly quickly. And from that, he can make a decision, being the human still, of making where would the call be made that day. Doesn't mean every call is perfect, but it means the probability goes up of it being perfect. And then if it's not perfect, he can rerun all that information back through AI and see if those parameters are correct. And that's awesome. Great way of the future. Now, what I liked about it was his profit and loss management, because I saw a couple things when I was watching. I saw him close out options early. So it'd be 2 o'clock in the afternoon, East Coast time. And the option got closed out. What was that? I sat there one day and I said, wait a second. Did he just roll that? And that's exactly what he did. So he has the ability, depending on market conditions, again, getting all the parameters fed to him. Does he close it out? Does he let it expire worthless? Does it let him roll because something happened in the marketplace that turned it against him? Or does he just cash settle at the end of the day? He has all this information at his fingertips within a reasonable amount of time to make those decisions. And he's actually managing the call after the call was made. This is different than I saw at other ETFs. They would make the call, the dice are thrown, and that's what's going to happen. And at the end of the day, they will either cash settle or it was out of the money. One of the two. You don't see them rolling. You don't see them settling early. You just don't see any of that with any of the other ETFs. And I like that. I like somebody that's actually managing the call after the call was made. That's what we're paying them for, after all, to be those professionals managing this stuff for us. If you're new to cover calls, and I'm going to assume some people are new to cover calls, in a bear market, it outperforms. In a flat market, we outperform. In a slightly up bullish market, we outperform. In a full bull market, we may not outperform. And probably not. We'll probably underperform. But the market is dynamic, and that can be expected. As I've mentioned, he has full control over the calls, and at the end of the day, of making several decisions of what he's going to do with the call. One thing that I caught him doing, because I was watching, was he rolled. And what he did was diagonally roll this call. And what does this look like? So on Monday, hypothetically, let's say he had a 5,800 call and the price moved through the strike price. What he does, if the parameters are correct, he can roll it to Tuesday to another 0 DTE option at a higher strike price. And this is what I caught him doing one day. It turned out in his favor. It may not turn out in his favor all the time, but he has guidelines to make those decisions to close it out early, take the profits. Again, more functionality with the calls than just letting the call go through the day and see where it lands. I like that. He did some diagonal rolls, and it's paid out for him, from what I can tell from my side of the fence. They're a relatively new fund. They're at 6.42%, greater than SPY, because SPY over the same time is 5.8%. That's really interesting. They're beating the market. Again, he's targeting 6.5% to 8% above the market. One thing we should discuss is his distribution rate. This was a great conversation because does he pay 8%? Does he pay 35%? What does he pay in distributions? I told him my goal of 8%. He's going to pay 14%. He has 3 separate buckets. Bucket 1 is options, and all the money earned through options are going to get paid out. So that's bucket 1. He has dividends from SPY. That is bucket 2. And the last bucket is return of capital. That is the last resort that he'll go to. But if he takes all 3 buckets, 14% is a reasonable amount of money to be paying out. Now, you have the choice of putting it back in. Myself, I'm going to pull off my 8%, and we're going to call it good. So I'm going to put back in 6%. And that's how I'm going to play it. And it's an interesting dynamic. His expense ratio is also 0.68, which is lower than others because he doesn't outsource all this other junk. He only outsources the actual legal, compliance, and the people that are actually holding the funds, because it gives a little more security of somebody actually holding those funds, and they're able to bring it to market at a reasonable price. Now, a lot of people like XDTE, so everybody thinks that's the greatest thing under the world. When I look at this, and TSPY is actually beating XDTE, which is interesting on the chart. They've been very close different times, but they're currently beating them. One comment I keep on making, and I keep on getting told you can't have your pie and eat it too. Well, and this is talking about NAV. And I take the same approach to NAV on these 2 funds. And I see TSPY right at SPY, or the S&P 500. And I see XDTE down by almost 4%. So why can't I have capital appreciation and distributions? I think it's reasonable to say I can. And I should. And so should you. Now, nothing wrong with XDTE, if that's your world. I'm in the world of, I want my 8% and I want some capital appreciation, which is what these guys are trying to achieve. I hope this explains what TSPY is. I'm personally buying TSPY. I got one whole share the other day. Now, on this, you should be very, very careful about buying TSPY. And I'm going to bring up the chart why. And this is on their website. So they do not hide this from you. You can see they trade slightly above NAV. Don't go out and try to buy this when it's above NAV. And if you do, use a limit order. I purchased it 1 penny above their NAV. I'm good with that. If you're paying 2, 3, 4, 5 cents, you can wait. Personal opinion. But they actually show you what their NAV is and the percentage above NAV. And hey, I think I got in at a good price. And you can go look at this on their website. And I will leave a link to their website down below so you can go look at it. And maybe this is right for you. Maybe it's not right for you. I feel that this is a better fit for me. One thing that I will tell you, this is more for a long-term holder perspective than I'm going to get in and out. And the reason I say that is because sometimes they trade at a premium and you don't want to be trying to sell and then it comes closer to the NAV. It doesn't benefit a day trader. This is more of a long-term holder investor type profile. I hope you found all this information fascinating. I did. Again, I'm going to grow this out over time with my 1 share, and I get paid distributions this week. And I'm going to start taking those distributions and we're going to build this out, and I will probably add this to my 500K portfolio, but it's going to be very slow and methodical and painful for you guys to watch me build this out 5 shares at a time, 10 shares at a time. I'm not going to go put in a large sum of money, and that's only because it's new. I don't want to go marching in. Not right now. Maybe after 2 or 3 more distributions and we see how things work, we can start marching in and say, hey, this is a good fund. Let's take a little bit larger position. And I probably will if it continues to perform in this manner. Hopefully this gives you everything you need to know about TSPY. And I want to say thank you to everybody that has bought me a sweet tea. Feel free to buy me a sweet tea or not buy me a sweet tea. Your choice. But thank you to everybody that's come out to support the channel. I greatly appreciate it. It makes me want to get up in the morning and do research. Until next time, God bless.